Hello people, welcome to Highest Forex. I'm African Rebel and this is where we guide traders for foundations to freedom. In this video, I'll be talking about multi-time frame analysis. I'll be guiding you how to use multi-time frame analysis while trading, or how to do multi-time frame analysis while trading through SMC. We're going to talk about categories of time frame, categories or types of time frame. We're going to talk about how to choose your preferred time frame, depending, or which is going to depend on your type of trading, which literally I'm sure a lot of us understand. And lastly, I'm going to practicalize on the chart for you guys to see for yourself. So without wasting much of our time, please, if you are yet to subscribe to our channel, don't forget to hit the sub button. Okay, don't forget to like the video if you enjoy our content. Please share us your comment in the comment section and let's get started. Alright people, trading through SMC, we have three categories or types of time frame that we look at. The first one is directional bias time frame. The second one is the counter trend or the re-entry time frame. And then finally, we have the entry time frame. Alright, so the directional bias time frame is literally what we call the higher time frame. Alright, as you can hear the name directional bias. So it is the time frame that we look at to get the overall price movement. It is on that time frame that we look at to get our higher time frame point of interest. It's on that time frame we look at to get our external liquidity, and it is on that time frame we look at to also get the overall direction of, or the overall trend of the structure that we are looking at, or the index or pair or whatever we are looking to trade. All right, now the counter trend or the re-entry time frame is a time frame that is used to join a trend or to counter trend or to counter trade a trend to a higher time frame or directional bias time frame point of interest. All right, I'm going to practicalize all of this on the chart as I earlier said, so please don't worry yourself too much about the grammar. When we get on the chart, you understand it properly. And finally, we have the entry time frame, which we also call the lower time frame. This is the time frame used for entry confirmations. Just as the name implies, we use it to refine and confirm the trade signals that have been given from either the directional bias time frame or the counter trend and re-entry time frame. Let's talk about types of time frame based on your type of trading. So trading through SMC, your choice of time frame depends on your type of trading. All right, so you can see on my screen, if you are a swing trader, your time frame is what? The 4 hour, the 1 hour, and the 15 minutes. So the 4 hour here, in line with our trading our time frame category and type that I've just listed for you guys, the 4 hour is the directional bias time frame if you are a swing trader. The 1 hour is the counter trend or re-entry time frame, and the 15 minutes is the entry time frame. All right, so if you are a day trader, your time frame are the 15 minutes, the 5 minute, and the 1 minute. So the 15 minutes is the directional bias, the 5 minutes is the counter trend or re-entry time frame, and the 1 minute is the entry time frame. So, and if you are a position trader, if you hold trade for a very long time, you can either use the weekly or monthly time frame as your directional bias. You can use the daily as the counter and re-entry time frame, and then you can use the 4 hour as the entry time frame. All right, now these are just based on sample space. These are based on sample space. All right, so you don't have to prompt yourself to all of this. One of the things you have to understand in the market is that you have to learn to evolve. Okay, most especially when it comes to the aspect of the directional bias time frame, you have to learn to evolve, because sometimes when you get on the chart as a day trader, I experience it a lot of times. As a day trader, based on the paper trading I've been taught, I have to look at the 15 minute for directional bias. But sometimes when you look at the 15 minute alone, you don't get a clear picture. You have to at least scale up or evolve a little to the 1 hour. And maybe sometimes even to the 4 hour for you to get what the picture is saying. So you have to stay as dynamic as so, and you have to also learn to evolve when you don't get the things you need on your directional bias time frame. But literally, these are the time frames according to your type of trading. So like I said, let me practicalize a little for you guys to see on the chart how we use, most especially to show you guys how the counter and the entry time frame comes in. All right, because I know the directional bias is something very literal. The entry as well is something very literal. If you don't watch how to filter entry, you can look at my previous video, you get to understand it. So I'm going to put my attention more on the counter trend and re-entry time frame. All right, people, so this is GBP/USD and this is the 15 minutes. Okay, I am a day trader, so I'm going to do the 15 minutes, the day trading time frame for you guys to understand, for you guys to see as an illustration. You can also apply the same criteria and the same the same theory I'm going to teach you. You're going to use it on the if you are a swing trader on the 4 hour as well. If you're a position trader, you're going to use it on the weekly and the the position time frame. All right, so you can see clearly we are in an uptrend. All right, but I'm going to be practicalizing more on what I said, the re-entry and counter trend time frame, because I know that is the one that will be sounding a little odd. All right, because normally we know that when price break structure we have to look for liquidity and blah blah blah. We understand that one, but the re-entry and counter time frame is a little bit confusing. All right, so we're going to start from here. Right, we have this break of structure like so, and price just pushed up, and because we know that this is our directional bias time frame, like I said, this is where we look at what the liquidities, okay, the external liquidities, which is this one that I've been taking right like this, price break of structure that have taken external liquidity from what equal highs. So we look at also the internal liquidity, and then we look at our point of interest. So we have a point of interest like so we know that when price break is structured like this to the upside, we have a point of interest at the pullbacks. Okay, so we have a first pullback here, which is our inducement. Price have come through it, so we know price have to come to a point of interest. So literally, we are expecting price to come to something like so. Price to come to around this level. Let's just have it like there's an OB or something that a price is trying to mitigate, which price did mitigate, right? So the process of price coming down here, you can see that no matter how I zoom in, right, there's no way I can join this market from this particular time frame, because it's just looking like a string, like it's just looking like an impulse coming down. But if you switch to the 5 minute, which is our counter trend time frame, you're going to see that the whole of this move is going to be a defined structure for me to be able to zoom into the chart and capitalize on this move downwards. Like I said, the counter trend time frame is used to what trade the market to our 15 minute or our directional bias time frame. All right, so the counter trend time frame here is the 5 minute. So let's hop on the 5 minute and let's break down this particular movement to the downside, and I'll show you guys how many times we would have gotten an entry here, or if there are possible entries for us to scale in while we are expecting price to come to our point of interest.
It's 8 o'clock.
Thank you, Samantha. Now, the reason why the counter trend time frame is as important is because of the fact that we know that this is probability. Market is probability, all right? We cannot just sit by and then wait for the market to get here. Market can come here and decide to fall off, like decide to keep going down. For a market to play here, we need the confirmation, all right? And there's nothing that is 100%. So in order for you not to waste your time, you can also capitalize in the current move that is coming down. Now, it is called counter trend stroke re-entry because of the fact that on this particular time frame right now, which is the 15 minutes, right, which is the initial directional bias time frame, it is a counter trend for you to trade down because the price has broken high and going up. All right, but if I switch to the 5 minute right now, it is not going to be a counter trend no more, because of the fact that the 5 minute trend is going to be that trend. All right, the 5 minute trend is going to be in a downtrend. All right, so whatever time frame you are is the time frame you should consider your trend to be, not like going to the whole daily, just like a lot of retail traders do. You go to the whole daily time frame and you say, okay, the daily time frame is bullish, so whatever you do on the other time frame, you're looking for buys. Nah, it's not ideal. Your directional your trend should depend on the time frame. All right, so let's go to the 5 minute and then we look at how price did, or what price did, and how price played, and how we would have capitalized on the move coming down, because we are not so sure as 100% sure, like nothing's 100% in the market. We're not so sure if price comes to a point of interest, it's even going to play. So there's no need of you just folding your arms and waiting till that time. You can capitalize on the current move of the market. All right, so we can see that before we broke our significant low, we had these breaks and all of that. Like I said, it's only on the counter trend time frame that helps us that helps show these things to be possible. So if we was on the counter trend time frame earlier where price started falling down, we would have had a break of structure, change of character like this, because we had this high and this higher high, right? But price have broken through the last significant swing low, so we have a change of character. And if you look here, we have a significant pullback, which is going to serve as our internal liquidity, right? which is going to serve as our internal liquidity. And the moment price takes our internal liquidity, we go to the 1 minute for the entry. I said if you want to understand the entry, look at the previous video. All right. So the moment price sweeps it, we go to the 1 minute for entry. We are already in the sell here, and why we still know that our overall direction, overall target is going to be here, because we understand from the 15 minute that price is going to get here. All right. So this will help you capitalize more, and it will also help you ease your stress of we don't get trade, we don't get this, and you understand what I'm saying, man? So we have another break of structure right here, and if you look, we have what, another liquidity level. Price took the liquidity. You go to 1 minute and get your entry. You can also look at here, this look at this candle here, is an important candle, and when price mitigated, it drops. So you can use the counter trend time frame to start taking trades and trading to your point of interest on the 15 minute. All right, so price became a string like so. We can't really define the break of structure until here. Had a break of structure, we had a liquidity here, price took liquidity, mitigate something there, and then we keep dropping. So the moment price broke structure again, like on the counter trend time frame, you are going to get defined structures. Like I said, it is called counter trend because of the fact that we are on the other, where we are on the directional bias time frame. But the moment you switch to this time frame, it is no more counter trend, because the trend here is now bearish. All right, that's why it is called counter trend stroke re-entry. So it is re-entry because we got an entry here. We are still yet to reach our higher time frame higher time frame POI. So we are still getting more entries and more entries and more entries. So that's why it's called counter trend and re-entry time frame, and it's also called the medium time frame. All right, so we have break of structure here, we have liquidity levels right here. This one, price didn't take before dropping. So since price didn't take this liquidity before dropping, liquidity world has shifted to this level. All right, and our break of structure is still here, not here yet. All right. For those of you who want to understand through SMC, look in the link in description. Come for proper mentorship. All right, so the moment price broke through this again, all right, it came down again from liquidity created, price broke through this again and created another pullback. So we have our liquidity again shifted here, because price did not come to take our liquidity. All right, so liquidity have been shifted here, and then when you align it, you have to wait for this particular liquidity to be taken. No matter all of the breaks and whatever that happens, liquidity to be taken, which it was taken right here. You can see price took it, and then we had a significant drop to our point of interest. So if you look at the counter 10 time frame, you can see that I have been able to get us a lot of scalings, a lot of re-entries, and a lot of counter trading, which we'll call it counter trading if we're on the 15 minute. But I told you guys, since on the 5 minute, the trend here is the downtrend, so it is on. We are in trend. We're not trading against the trend. All right, so you just have to practicalize these things so that you don't get make mistakes or have yourself to blame when you just watch a video and then you just run into trading your live account. So also, how to trade the directional bias and then the entry is just like whenever price meets your directional bias time frame point of interest, you just hop to the entry level, your entry time frame, and look at what you need to look at. Like I said, if you don't understand entry and want to understand, look at my previous video. So it's just everything is simple. Combine this time frame is simple. So make sure you get the time frame I have listed and use yours according to your type of trading. If you're on the 4 hour, what I did here on the 15 minute, looking at the break of structure and then trying to trade down using the counter trend to my point of interest, you look at your point of interest. If you're a swing trader, your point of interest, your directional bias should be the 4 hour, and then your counter trade or re-entry time frame should be the 1 hour. So you do all of this on the 1 hour, and then your entry time frame is on the 15 minutes. So guys, I want to keep it simple. Please don't forget to like, share, or comment. Please don't forget to subscribe to our channel as well. Thanks for watching and stay highest.